All right, let's take a look at exercise 4.4 here, dealing with the journal entries related to accumulating the factors of production. And reminder, if those factors of production, as you see above, direct material, raw materials, labor charges, as well as manufacturing overhead. Those factors of production, in other words, are just your product costs. So this question here, Chico Hands Incorporated is a manufacturing firm that produces boxing gloves in 2018. Gross wages for workers on all jobs were $600,000 that year. This includes payroll taxes of $75,000. Raw materials purchased this period were $450,000. In addition to the previous costs, manufacturing overhead costs incurred due to various items during the year amounted to $300,000. Based off of all of this, easy for me to say, record the appropriate journal entries based on the above transactions. So a reminder, these are essentially what we're doing here. If you think of that 7-step process, scroll back, my apologies, 8-step process, including selling the inventory, 7 steps to complete production. We are looking at steps 1 through 3, raw materials being purchased, production labor being incurred, and actual manufacturing overhead being incurred. So if we want to go back to the question here and prepare the journal entries for that, it's going to look like this. So the first journal entry there is to simply record the materials purchased. Materials is an inventory item, so it is a balance sheet and it is an asset. So to increase it, we're going to debit it. So we're going to debit raw materials inventory for $450,000. The credit, it didn't specify, so we can assume it was either cash or bought on account. So you would credit either cash, which is an asset account, so that would decrease it, or you would credit accounts payable for the same amount, the $450,000. That would be step 1 in that 8-step process we go over here in this chapter. Step 2 is recording the labor costs incurred. We hold the labor charge in a control account. A control account is a temporary account that we just use for tracking purposes for production in this case. So we set up a labor control account, very similar to like an asset account in this case. We incurred $600,000 worth of labor in the year, so we're going to debit that labor control account for $600,000. If you want to just call it labor, that's fine as well. We'll know exactly what you mean. Of this $600,000, it was stated that $75,000 made up payroll taxes incurred. That you would want to separate out from wages payable. So notice we have a line item for wages payable for $525,000, which is simply the difference between the $600,000 incurred and the $75,000 withheld that has to be remitted for federal taxes, for payroll taxes, I should say. So we credit payroll taxes payable $75,000 to show that amount. The remainder goes to wages payable. That's the amount that actually reaches the laborers, the employees, the contractor's actual bank accounts, and we credit it for $525. But again, notice obviously for the journal entry, both sides have to balance. Debits are $600,000, credits are also $600,000. And then step 3 there, recording the actual manufacturing overhead incurred. Similar to the labor control aspect, there is a control account for manufacturing overhead. It has a debit and a credit side. The debit side is the actual overhead incurred. The credit side is the applied or estimated overhead, which you'd see in steps 4 through 6, specifically step 6. In this case, we're recording the actual manufacturing overhead. So I'm going to debit manufacturing overhead for $300,000, and then I'm going to credit the various items because it didn't specify there, but it could be accumulated depreciation, indirect labor, indirect material, whatever the case is. But we're going to credit various items for the balance.